Good morning. Nifty 50 bulls are facing a brutal 24,500 ceiling today morning. It is April 21st and 4 am. And while most of the retail crowd is celebrating a 4-day winning streak, the data tells a much colder story. So we are looking at a potential 1,000 point drawdown risk if the Islamabad talks fail today. So let's start with a Monday recap. Yesterday, the Nifty 50 managed to scrape together an 11-point gain, closing at 24,364. On paper, it looks like a fourth straight session of gains. In reality, it was a volatile tug of war. The index swung 240 points from its high to low. And why does this matter? Because the advanced decline ratio has turned weak. When the index goes up but more stocks are falling than rising, you are looking at a selective rally. The recovery only where a few heavyweight stocks are doing the lifting while the rest of the market is struggling. Bank Nifty mirrored this, closing at 56,301. We are seeing the big boys holding the index while the broader market starts to feel the gravity of high interest rates. So this is the definition of a fragile floor. Moving on to the fundamentals of buying and selling. The most critical data point from Monday is not the price, it's who is actually buying and selling. FIIs remained in aggressive sell mode, offloading a net 1,059 crores. We are seeing a classic risk of move by the FIIs where the global funds pull money out of emerging markets like India because they are worried about global stability. However, our domestic institutional investors provided a massive 2,966 crore cushion. This 3:1 buying ratio is the only reason your portfolio is not showing deep red today. But ask yourself, how long can local money fight the global tide? Domestic mutual funds are betting on a diplomatic resolution in Islamabad. If that resolution does not come, this domestic safety net might start to fail. This is the liquidity trap. Our local market is forced to buy exactly what the rest of the world is trying to sell. Moving on to the Strait of Hormuz. Overnight in New York, the mood shifted from optimistic to anxious. The S&P 500 fell, but for the Indian professional, the US markets are secondary today. The number you need to watch is Brent crude at $95.48 per barrel. Iran's decision to restrict traffic in the Strait of Hormuz is essentially a global energy tax. For India, which imports over 80% of its oil, 5.6% in Brent is not just a headline, it's a direct hit to the value of the rupee and threat to corporate profits. Right now, negotiators are sitting at the Serena Hotel in Islamabad. The market is in a holding pattern. No white smoke or no positive from that summit means no breakout for the Nifty. We are effectively trading on geopolitical whispers for over last 1 week. Let's talk about levels of Nifty for today. You need to anchor your trades today around the 24,480 to 24,500 zones. This is not just a psychological number, it's a massive ceiling where sellers have placed heavy bets. Yesterday, they defended this level with clinical precision. We need a decisive rally close above 24,500. If we get that, it triggers a short covering rally where the sellers are forced to buy back their positions, taking us straight towards 25,000. The support zone or the floor is 24,240. If the Nifty slips below 24,150, the April recovery is officially over and we enter a phase where the markets will look for much deeper bottoms. Keep an eye on 55,800 for Bank Nifty. If the banks break, the Nifty follows. Resistance stands tall at 56,650. Finally, let's look at where the smart money is hiding. Trent Limited is the outlier, closing at 4,235. It's riding a wave of bonus issue hype. But remember, buying into bonus announcement is often a buy the rumor, sell the news trap. Watch the board meeting outcome closely. The defensive play is NTPC and Power Grid. When the Nifty is in the red, the market hides in defensive infrastructure. These are the stable companies that provide steady returns while growth in the other sectors is uncertain. Lastly, watch TCS and Reliance. These are the two north stars of our market. Yesterday, they were drifting aimlessly. For the Nifty to smash through 24,500 wall today, these heavyweights must stop being anchors and start being the engines. If Reliance stays flat today, the index has no chance of a breakout, regardless of what the domestic funds do. Now let's come to the most important part. What should you watch out for today? The India VIX is at 18.79. Not a big number, but it is up 9%. In simple terms, the fear gauge is rising. The market is paying a premium for insurance against sudden crash. So today's session is the test of whether this recovery is sustainable or just exhausted. Don't be a hero in the first 30 minutes. Watch the 24,300 level. If it holds through the first 2 hours, the bulls might have one last charge left in them. Watch the Islamabad headlines. Watch the $95 oil ticker. And thank you for tuning in so early in the morning. Join our community of methodical investors by subscribing. We prioritize data over hype. And if you have any questions, I'll be live at the opening bell 9:15 today. You can type your questions to me and I will give you those answers. Good luck and have a great day.